Morning, guys. Welcome in. Welcome in, everybody. Happy Wednesday. Freddie, Carlisle. Welcome in, everybody. AZ Stocks, Sam S, GG Priceless. How you doing, man? Salsa, Frederick. Welcome in, everybody. Happy Wednesday. Happy downside day yesterday. A little bit of volatility. Finally some good price action. Some sustained directional moves. This is what we've been waiting for, right? We've been waiting for this for a few days. Is the move, and it gave you it, and it actually was quite tactical yesterday. And we're going to talk all about yesterday's price action, and I think we had the right sort of levels to watch, right? We had the key supplies in front of us. We had that 544 or 644 on the S&P. That was at channel high. We had that 642 demand below, and we knew where this was going. I think that was the most important thing. We knew where the SPY was going yesterday if it did what we thought it was going to do, which was under 642. If we broke 642, we knew exactly where we were going, 639. And the market has done this. The market's moved into the key demand today. And the big question mark we're going to have to ask ourselves in this morning is, what do we do at our key demand zone? Do we break below our key demand? Or do we see a pop and fade today back into 642, back into 640, right? Where is the pop and fade? Is the pop and fade valid? And is there a demand? Is there a long here, right? Because again, this is key demand on SPY. There's a lot of questions to ask this morning, and we're going to try to go through all of it and see if we can come up with a thesis today, right? A scenario-based thesis where we can trade off of it today intraday. That's the goal, really, is to come up with a scenario-based thesis where we can trade and navigate the market in whichever direction it gives us, okay? Because again, we were at key support this morning. We've seen some aggressive downside yesterday, and there was shorts yesterday. There was opportunity to go short yesterday at key levels, but now we've retraced to key demand this morning. We have to look at the market with an unbiased approach, and we're going to review everything that could potentially happen today's session here on the S&P. That's the big focal point today's session. We're also going to discuss today here the QQQ chart. We'll talk about Qs, and we're going to go over what's going on here on the Qs. Of course, 575 break yesterday, which was our key level break. 572 as our next structure break, and now we're back at 566, the next level, right? So level, almost 3 levels broken yesterday. Now we're back at the 3rd level, so 2 levels broken. The question today is, what do we do at 566? Okay, so we're going to talk about that today here on the QQQ chart. We're going to go over Nvidia, right? Nvidia downside under 178.50. Very big technical break yesterday. This was actually a beautiful break and retest short under 178.5 for downside into close. This morning we are at key demand. Again, the market has a theme today. The theme of today's session is aggressive move down yesterday, but we've moved into key demand. Do we break key demand and sustain the selling into the next big level? Or do we hold key demand and see pop and fades at resistance levels, right? That should be the question we ask. And we're going to be looking for the signs of where we can find out where that's going to actually happen. And for me on Nvidia, it's going to be 174. 174 as a major spot here in Nvidia. 174 is a long spot. If you hold 174, we're going back into 175. So we'll discuss the potential long idea on Nvidia, and we're also going to go over the short thesis here on Nvidia as well. We'll go over AMD downside. Obviously, this is moving out under a very key level. In my opinion, this is a big level break. This is a 168 level break here on AMD, and this was my major spot yesterday. We held it initially off 168. This was a big hold spot yesterday on Nvidia, on AMD 168, but we've now faded it. So we're going to discuss where this can go today's session. We're going to go over PLTR. We're going to go over Tesla. We'll go over Meta. We'll go over the whole lot this morning session. Anyway, so let's discuss. There's a lot to go over this morning. Someone said, Brett, be stuttering, trying to read the chat and think at the same time. Yes, that is probably true. Okay, so economic data for today's session. This morning, Wednesday, August 20th, it is a hectic session, okay? The reason why is because we have FOMC minutes today at 2 p.m. We have a 20-year bond auction at 1 p.m. as well. And we also have the Jackson Hole Summit beginning today. I think it's today. Correct me if I'm wrong, but I think it's today is when it begins. We have Jerome Powell speaking at the summit on Friday, but this is when the conference begins. It should be today. If it's not today, it's tomorrow. You guys can correct me in the chat. But again, this is an important session. It's not only an important session because of the Jackson Hole, but it's also important because we have the FOMC minutes today. FOMC minutes has become a really important event for some reason. I don't know why, but it has been important. It's been almost equally important to our CPI release or an FOMC day. Now, it's not so much to say at 2 p.m. we're going to see a massive candle, but it's saying that the session today, the intraday session today on these FOMC minutes days tends to be very volatile in totality, right? So the idea is like it may not be a crazy 2 p.m. candle, but it may be a lot of volatility just, of course, because of the FOMC minutes. So just be careful today. Let's see what we can get. It could be a little tricky today. It could be a little tricky. Yesterday was pretty easy, right? The levels were easy. If you just showed up and had the levels in front of you, you probably could have made money yesterday. Today's session, let's see what happens, okay? On the earnings reports today, we have a major letdown for me, Target. It's a sad day for me. I opened my account. I'm down $22,000 this morning. What are you gonna do? Target, horrible, right? Look at Target. It's an unfortunate day for me. So I mean, look, this is the reality. Sometimes it may take some time. So I'm gonna have to see what I'm gonna do here in Target. But I'm down about 5% at this point on my shares. I'm gonna look to see if I can build more at 89, and then I'll have a stop loss under 80. So let's see. I really want to see what this chart does after earnings. It needs to settle down. But of course, you have my little my new position Target is not doing too well here. So we'll discuss that later on in the session. Okay. Thursday, tomorrow, we have Walmart, more retail names. Besides that, you have Zoom on Thursday as well, after hours, BJ's on Friday, pre-market. So that's what we have on the docket coming up, right? Let's move on, guys. Let's go over the first chart for today's session. Let's talk about the S&P. This is why you guys are all here. You guys want the levels. We are going to jump right into it. So, first of all, I want to get hydration because I'm going to be yelling a lot today, and I need to like get this before I start yelling. So, yeah, the boycott killed them. It's not just the boycott. There's other things impacting it, but let's see what happens. So, let's dive into this. On this pie chart, yesterday's session, it was about two different things, okay? We spoke about this in detail pre-market. We said, listen, we had a level here at 644. We have a level here at our 642. If we've had 1, 2, 3, 4 days of consolidation, anything in between here is your shit zone, right? You don't want to be trading in it. If we break and hold above 644, upside back into highs. If you break below 642, downside, break and retest into lows. This type of scenario-based trading is the only way to prepare you for a day like yesterday. Because if you're sitting around at 11 o'clock in the afternoon and you're seeing the market break down under 642 and you're there stuttering and like, oh, I don't know what I'm going to do today. Well, it's because you weren't prepared. Seriously, that's what it was. Yesterday's session was a beautiful downside day. You could have caught longs at the open at a support hold. You could have caught shorts at 642 for a resistance rejection, or you could have even caught longs end of day for a 639 golden level hold. There were opportunities all day yesterday if you had the levels in front of you. Now yesterday's session was really mostly downside involved. It was mostly a downside day, seeing the break and retest short under 642, in which case we saw substantial selling into 639. And this was not an unexpected day because, again, we knew that once we lost 642, you should see continuation at least back to that 639 level, which is where, again, you'd see buyers step back in, right? Because, again, that was our major support zone. Now, that was an interesting session, right? But today's session, you have a big downside day on Tuesday, and this was the first big downside day in a while, but we've moved back into a critical demand zone. And this critical demand zone is not something that I want to be shorting back into. The reason why is because on the 1 hour time frame, just look at this for a second. Just take a second and look at this. You can see 639, 639, 639, 639. Now, granted, if you see us under 639 today, let's just say you see us under 639, then yes, absolutely. We are failing here big time. We can see the short back into 635. But as of right now, the market's still maintaining a very key technical support zone, in which case we can probably see the market bounce today if we do continue to hold this level. So what would I be watching for today's session? The first thing, the most obvious thing is look for the pop and failure here at 641, 642. If you see us pop and fade today, 641 to 642, that's your short today and a downside play. But in no scenario am I doing this. Am I going today and saying, guys, it's 9:33 in the morning. I'm loading shorts because I want to short into a key level here because I think it's going to break down. I don't know if it's going to break down. I have no clue if it's going to break down. If it does break down, then I can look for shorts into that resistance for the move down lower, the leg down lower. But as of right now, you would just be shorting into a major hold spot. And we don't want to be doing that today's session, at least in my opinion. So what I'd be watching for today's session for shorts is I'd be looking for this. Pop and fade 641, 642. Pop and fit, or actually a break and retest under 639 for shorts back into 635. Those are the two short possibilities today's session here in the market. And we know how important 639 is. 639 is our bull bear pivot. Therefore, if you lose 639 and the previous all-time highs, this could get really aggressive. You saw yesterday what made the market so aggressive to the downside. The reason why the market got so aggressive to the downside was because you had a big pocket of trapped buyers, right? Now, this pocket of trapped buyers, that's beautiful. It leads to shorts in the market, and the market can really reverse. The next leg of trapped buyers is going to be if we fail back below 639, because this previous all-time high breakout is going to result in a serious bulk of trap buyers, right? It's a very bad word. A lot of trap buyers are going to be trapped if we break back under 639. And you can see why. Everyone who longed the breakout above 639, their shorts are going to be probably somewhere under 638 today for that downside move, right? So this is what I'd be looking for today is saying, okay, well, if we do see us under 638, 639 today, then we can get really aggressive in the market and see another leg down lower into 635. But even with that idea, we cannot short back into this major support zone because we know this is where the market could potentially hold up. Again, 639 previous all-time highs. Let's be careful of this going into our Wednesday morning, okay? On the ES chart, it's the same idea. If you want to be shorting today, you want to be shorting either here, back into 64.60, right, as a supply rejection, or you want to be shorting back down under 64.20 for that break and retest short and to move down lower. That is what I'd be watching for shorts today. But in no environment, in no scenario, am I at 9:33 in the morning going short because we are holding 64.20. I'm not doing that, right? This is still a big support, a big support, a big support. Look for shorts here or look for the break and retest short here under 64.20 for the downside move back into 63.90, back down into 63.55. And granted, I'll tell you this, right? What did we say yesterday about the ES and the SPY? We said for days and days and days that if we do lose this level, we're going to see this level. No question, right? But the question is, do we lose 64.20? Because if we do lose 64.20 and we start to lose these lows, then I think it's not only going to be a downside day back into this, but I think we see it back into here, right? I think eventually the market's going to retrace. Why is my face so big, guys? Look at my face. I can barely see the chart. You guys got to let me know. I'm seeing like half of the screen is filled up with my chart. Hold on, let me just or on my face. Let me just move this down lower, and then now we're so much better. There we go. Okay, so that is so much better on the ES chart. Okay, you can really see it now. Under 64.20, right? That's where things become interesting because again, you are trapping up all of those long buyers above these highs. And in that regard, I think we see the move back down to the start of that uptrend, which would be 62.50. Okay, so I know we're asking for a lot here, but we must be aware of where the market's headed if we do start to break demand. Because technically yesterday, we just broke a little support zone. We didn't break any key demand zones. Let's see today what happens if we start losing demand. But as of right now, you look at the SPY, you look at the ES, and we must understand that there is a demand hold coming in here. This could be a short-term long opportunity right now on the ES chart. Again, we have to see what happens here at the open. The first 30 minutes of today's session is going to be interesting. If you see the market open like this today, if this is how you see the market open today, a big base being formed here, then this is not a short. It's probably a long, Okay. If you see the market do this today, rally higher immediately, look for the shorts back into supply. If you see us fail immediately under our demand zone, I would be very careful of going long. And I argue we probably fail back lower into 6390 and potentially all the way back down into our demand zones below. Okay, so that's what I'm seeing here on the ES and SPY chart. We must be prepared for all possible scenarios today, particularly the supply rejections at highs and also the demand hold right now on the ES and SPY chart. Okay, on the Qs chart, on the QQQ, what I'm watching for is on the Qs 566 demand zone below, 572 supply above, 575 supply above. Yesterday there was I think Mike actually traded this short, was actually one of the best shorts off the open. That was actually really nice. You can see, look at the break and hold under 575. You can see 575 break, retest, downside move. That was a short yesterday at 575. Now today's session, not only did it give you a 575 rejection once, but if you missed it the first time, it was there wearing a big neon colored shirt, right? It gave you another supply rejection at 575 for the downside move. Now, I'm not going to tell you I caught this guy. I didn't really catch shorts yesterday in Qs. I didn't catch shorts at all yesterday in Qs. But this was still a very beautiful trade if you had the levels in front of you. 575 big supply rejection, which resulted in downside back into 572. And then look at 572, right? Look how beautiful 572 was. Again, 572, break, retest short, downside move. This is why I love trading with levels, because if you trade with levels, there's going to be opportunity as long as the market's moving in one particular direction, right? So here on the Qs, downside under 575, downside under 572. The question today is, here's the question, right? Jeopardy question is, you see downside, under trend, beautiful, right? Do you want to short back into 566? My argument to you is probably no. If you're looking for shorts, you're either looking for shorts at 572, you're looking for shorts at 575, or you're looking for shorts under 566. In no environment am I going to be shorting back into 566 support, because of course that is a big demand zone, right? We must be aware of these scenarios. I know I always say that. I feel like a lot of what I do is repetition, right? But repetition is important in this environment, right? We must understand this is what we're doing, okay? 566 holds, we are not going short there. It's a long, right? If 572 pushes back into, that's a short, that's a short. That's what I'm seeing today here in the QQQ chart. It's very simple. Let's see what happens. If we do this today, this would be outlandish, but this is an FOMC minutes day, and outlandish things happen all the time. If we somehow do this today, let's just say you catch a little short here at 572, beautiful, you're up $1,000, right? Nice, good day, 20, 30%. It rallies higher, okay, interesting. It pushes into 575, and it clears above 575. This would be a massive flip in the market, and even though it's unexpected, I mean, if this happens, this would be crazy. We would probably see a squeeze into 583, plus this would be no doubt type of trade. That's what I would expect today's session. I know it's crazy, but let's see what happens. As of right now, though, I'll be mostly watching 575 for shorts and 572 for shorts. That's what I'll be watching. But if we do get above 575, then of course, there is a squeeze potential today. Okay. All right. I feel like I'm yelling at like 1.5x speed. I feel like we are absolutely going very fast today, right? Let's move on. Let's go over the first ticker today's session. Let's talk about Tesla. So Tesla. I long Tesla yesterday. I long Tesla on Monday. I long Tesla on Tuesday. I had longs all week on Tesla. I longed it here on Tesla. I longed it here on Tesla, or actually over here. I longed Tesla over here yesterday for the upside move into here. And then look at the failure that came in on Tesla. Look at this. This is such a beautiful example of a whim-wham. Okay. When I say whim-wham, I know I'm just saying weird words, right? But what a whim-wham is it's basically a trapped buyer or trapped seller scenario. And yesterday on Tesla, it was a beautiful continuation breakout trade, right? But as soon as it broke out and then failed below that breakout level, how do you think all those buyers are going to react as the market's failing back below your key level? If you have a breakout level at 337.80 and you're long on Tesla at 337.80, it moves to 340.8, right? You're up nicely. Wow, you're beautiful, right? You're up a few $1,000s in a day. Then you have a trail stop down below and it fails below your breakout level. What are you going to do with your equity position, right? As a reasonable, smart trader, even if you're a fund, what you're going to do is you're probably going to trail out. You're probably going to sell. So that's selling. The strongest name can turn into one of the weakest names in the market very quickly after it fails back below a key level. This is why some of those trap buyer, trap seller trades are some of the best opportunities. Even though I was long yesterday in Tesla above our highs, this actually turned into a beautiful short. Now, I didn't trade this, to be honest with you. I did not catch short on Tesla at all. I only caught long on this. But this was a beautiful short and a downside move back lower into 327. This was actually a really nice trade. Again, why am I talking about it? It's not important. Today's session, what is important here in Tesla is going to be this right now, right in front of us. The question on Tesla this morning is, are we holding 327? 327, 327, 327. You can see 327 is an important breakout level here in Tesla. If we are maintaining 327, this could potentially be another long opportunity, again, right here for an upside trade back in 338. If we lose 327, then this is a wrong idea, and we're probably going to move lower into 318, and I don't want to go long there. So again, what I'm watching for in Tesla this morning is I'm looking to see, are we maintaining above 327? If we are, this is a long opportunity with a stop loss underneath it for an upside trade. I'm watching that off the open. Now, granted, I traded Tesla on Monday. I traded Tesla on Tuesday. Do I go a third time and trade it again? I feel like I probably will look for other names to trade today. But if you are watching for something, watch Tesla longs here at 327, assuming the market holds up. Again, this is a chart that even though it did see a trap buyer scenario yesterday, it didn't really break any demands below. And that's an important idea here on Tesla. In complete and opposite analysis here, look at AMD. And look at AMD is interesting because AMD is under a lot of support zones, okay? Now, AMD, my major support zone was 168. Now, I knew if we lost 180 that we were going to 168, but my mindset, you guys know this, was not to be short back at the 168. 168 was the major long spot yesterday, right? And what happened yesterday was we failed back below 168. So this is not what you want to see for longs. As long as we're under 168, this is a very top-heavy chart, okay? So my analysis here on AMD is mostly short-based, of course, as long as we're under 168. So watch for the 168 pop and fade today. If we do pop there, look for failures off that 168 level. Okay, if we sort of continue failing lower today, under 168, we're moving to 162. Even though I'm saying this is a top-heavy chart, meaning there's a lot of sellers involved here, I don't want to be short back in 162 either. So I know this isn't a wonky session because there's a lot of things happening, a lot of moving parts. If we are under 168, we should in theory move into 162. But if we go to 162, you don't want to be short at 162, right? So to sort of make this a very easy drawing here, you can say, well, if we're under 168, look for shorts, right? That's your short opportunity. If we fail back below into 162, then this is a long opportunity, okay? So don't be short back at 162. This is still an area I would expect buyers to sort of to come back involved and see this rally higher back at 168. So don't be short into that 162 area here on AMD, okay? Moving on Nvidia's chart, you can see Nvidia is in a very similar analysis. You are under our key resistance here, 178.50, which is our big supply zone, but we are still above our 174 demand zone. So what do we do here on Nvidia? Well, very simply, it's this. We know Nvidia is bearish here, right? We know Nvidia has broken some key levels, but it's still maintaining 174. So for me, this morning, I am watching for either 178.50 rejections. If we pull back there, I'm looking for shorts at 178.50, 179 for shorts. But if we hover around 174 today, I don't want to be short into this demand zone because you can see it's that previous all-time highs and that previous hold spot that's maintaining us this morning here on Nvidia. So be careful into 174 today. I don't have enough data here to make a very strong conviction analysis. Sometimes I will have enough data, right? Remember, sometimes we will. Sometimes SPY, we know what SPY is going to do. If we're holding our level at 639 on SPY, we're bullish, okay? But right now on Nvidia, you are sandwiched in between a major resistance and a major demand. At this moment, we don't really know what it's going to do. If it can hold this 174, it's probably going to go back to 178.5. If we fail 178.5, we're going to 178.50 to 179, we're going to see the downside trade back lower, and that's a beautiful short. Again, at this moment, I probably would just look for you to trade the range, which would be demand zone below, supply zone above. That's it. That's all I have here in Nvidia's chart. Okay. On the SMH, the worst case scenario has presented here on the SMH. What is the worst case scenario? The worst case scenario is the fact that we confirmed the head and shoulders. And this is why I told you guys again and again and again, days and days and days in a row, we mentioned the idea of semis being in that head and shoulders and to be careful going long on them if you see the head and shoulders begin to form here. I'm not a pattern trader. I don't trade many patterns. But when I see something so clear set up, I will tell you guys about it. And here on the SMH, you guys probably know, we spoke about this again and again and again. You can see your left shoulder, your head, and your right shoulder. Now, this has obviously resulted in some downside under 293, which is the neckline break, and the breakdown into 288. The question today is, cool, we've seen the head and shoulders form. Where do we go now here on semis? Well, it's very much so the case similar to Nvidia. We just don't know, because at this moment we are again sandwiched in between a big supply zone and a big demand zone. If you see us maintain demand here again here at 288, which is a big demand, big demand, big demand, then we could just rally higher back into 293. You could see some dead cat bounces today on semis. I don't want to be short semis into my demand zone here on the SMH, which is still 288. So even though I have this little cute head and shoulders, I don't care about that anymore. It's already formed. It's done. I'm done with it, right? What I care about now is big level 1, big level 2. Don't be short in a 288 and don't be long in a 293. That's all I have today here on the semi sector, okay? Moving on. Let's move on, guys. Let's go over to the next ticker. Let's talk about Meta. So Meta, big downside on Meta. Meta levels pretty clear. You can see the big level of demand below is 738. At this point, I argue Meta probably moves into 738 demand zone. This is still an opportunity for longs. I know it's a little far-fetched because this is a pretty weak chart, but this is still demand zone below, right? Watch 738 as your key demand. I'm not a big Meta trader, but keep this in the back burner today's session, okay? How many views do we have? We have 1,100 views and 425 likes. Guys, get the like count up if you can. It is highly appreciated. It's the only thing I ask for. It is the only thing I ask for, okay? PLTR. Okay, PLTR, deadly. So, what did we say about PLTR? We said yesterday that PLTR under 178 should move into 161, but be a profit taker to 161. That was the right idea yesterday, right? You saw some levels maintaining here at 161. 161 maintained. It was your sort of demand zone yesterday session. But we've now lost 161. And again, very much similar to our 178 rejection. You saw 178 maintain, and then we lost it on Friday, big downside. Today's session here on PLTR for Joshua, you're looking to see, is this under 161? Because if we are under, where's my draw tool? If we are under 161, this is going to set us lower for the next leg down. At this moment, this chart is bearish as long as we're under 161 and bullish if we are above 161. That's all we have here on the PLTR chart. So at this moment in the short term, we are bearish because we are underneath these lows, the breakdown level from yesterday's session. So this morning, you should be looking for a pop and fade today at 161 level. Okay, that's all we have today here in PLTR, right? Moving on, Netflix. So was I wrong about Netflix? No, I was not wrong. I was not really wrong here. You could see supply rejections coming in a little bit early here. I said 1262, 1260 for supply rejections. Supply rejections on Netflix coming in around 1250. So quite a bit early, but the supply rejections came in. What do you do on Netflix today? Nothing. Okay, there is no trade on Netflix right now. I don't see anything here. There's nothing here to trade. It's at support again. This is a long for me right now. Okay, 1200 is a big support zone. Don't be short back at 1200 demand. This is where the market can begin to hold up again here on Netflix's chart. Of course, if you lose 1200, then back down lower. But as of right now, 1,200 here, Netflix holding. It's a big demand zone. Do not be short back into it. Okay. Moving on. I need to go over a few other things. Apple. I feel like I'm missing charts today. Apple is still bullish. Okay. This is an interesting chart because Apple is still maintaining levels, right? What did we say about Apple? We discussed the ideas that were bullish. We also discussed the ideas that were bearish. We said Nvidia not holding, AMD not holding, but Apple was holding, and Apple was maintaining really well. That is why Apple, even though the market's selling off, is holding levels in a way that makes me interested, right? I want to go long in Apple at key demand zones. I would still be watching for today. I mean, this is probably going to be your best possible long today. I'll tell you this right now. If SPY bounces, where do you think Apple is going to go? If SPY moves up this much, Nvidia is going to move up this much, probably, right? Just giving you an idea. If SPY moves up this much, Apple is going to move up this much, right? Just an idea, right? Because this is just a percentage-based approach here. Apple is maintaining really well. So at this moment, if you see Apple begin to reclaim and SPY begins to maintain levels of demand, then you should look for longs on Apple today above 230. That's it, right? I'm not saying we go long at the gate here on Apple. I'm not saying I'm perpetual bull here on Apple, but I am saying as long as the market's holding and Apple is displaying this relative strength, then we can look for longs above 230 for an upside trade. We can also look for longs here at 221 for a demand bounce. That's all I'm doing today here in Apple, right? And this is one of my top watches for longs. Is going to be longs of highs on reclaims, the market's holding, or looking for longs at demand zone 221, right? Okay, Amazon Scamazon, 226, right? Again and again and again, my bounce level was 226 here, and it's actually a little bit frustrating right now. This is my pre-market that this is happening, but this is my long spot right now here on Apple. Amazon. I'm all over the place. Amazon 226, 226, 226. As long as Amazon's holding 226, this is a potential hold spot in the market. Okay. So at the open this morning, we could look for longs here. If we lose 226, no longer am I looking for longs. This is probably going to fail back lower. So your bull bear approach here is above 226 bullish or below 226 bearish. As of right now, we're holding bullish here. So let's look for longs here at demand for an upside trade. Okay. That's what I'm watching today here on Amazon's chart. Right. Let's move on. Let's go over 1 to 2 more tickers. I'm going to review the chat. What do you guys have for me? Any tickers you want me to go over before I finish off the stream? Is there anything I'm missing? I feel like I'm probably missing something today. Target. Okay, let's go over Target. On the Target chart. So I am down quite a bit this morning on Target. My average is 100, so I'm down about 7% in equity. At this moment, I know where this is probably going to. I see it. Look, I'm a bull here on Target, but even as a bull, I know this is moving back into this zone over here. We're moving back into this red box. That's what's going to happen here, right? We must detach your position from the analysis of the overall chart. And right now, this is going into my key demand zone here at 88, 89 to 85. That's where this is headed back into. Can I maintain this as long as it does that? Yeah, I will, right? My stop is under 80. So for me, I'm maintaining this, and I'm going to look to build more size into my demand zone. I'm okay and comfortable doing so. But of course, I know Target right now in the short term is bearish. This is the bearish chart right now in the short term. You can see a little bear flag, right? And a breakdown lower back into key demand. So I know that this right now, at least in the short term, is structured for another move down lower, okay? That's Target. What else do we have? What else do we have? SoFi. Let's do SoFi. Let's finish off with SoFi, and we'll finish off our beautiful pre-market. So, SoFi. I mean, I know this is far-fetched, but at some point this is going to happen, right? And I say this, and I'm usually right about it. 18.5 is the level I'm watching for in SoFi. That's it. I don't have anything else here in SoFi. I know you're looking for me to give you more analysis here, other levels, but sometimes there is just none. There are no other levels to watch out for. 18.5, 18.5, that's my key spot here. The only level I would trade SoFi off of is 18.5. If you pull back to it, long spot there on SoFi. Okay, guys, that is it. That's a beautiful pre-market this morning. I think we went over a lot of different stuff today. I know this was a lot. If you are new to my YouTube, you probably are overwhelmed because today is an overwhelming session, and it's important that we go through all this information. So I know it was fast. We went light speed today, so I appreciate you all kicking it with me, and I'll see you guys all for live trading. Bye, guys.